What are candlesticks? There are learning tools and comprehension instruments in every field, but they're never more complicated than the Forex market, which primarily uses charts. Charts are a graphical representation of data. A chart pattern is also called a price pattern, which is a pattern in the graph of prices. During technical analysis, chart pattern studies often play a significant role in trading stocks and commodities. When data is plotted, there's often a pattern that shows up naturally and keeps happening over time. Chart patterns can be used to show either a change or a continuation. These three chart patterns are most primarily used. 1. Line charts. Line charts help traders learn from fluctuations. It represents a linear price flow in the market, representing the starting and the ending of a currency pair in that given time frame. While linear charts have basic data points given to analyze, it does not always showcase the details of price fluctuations in the given time frame. 2. Bar chart. Anything that isn't a line chart has 4 key variables: open, high, low, and close. This is defined as the duration plus a variant calculator. It allows you to determine deeper price or entity or currency pairings. 3. Candlesticks. Candlesticks are the Japanese method. They were brought to the West by Steve Nissen. The candlestick is a solid method for someone to understand the price flow of a given currency pair. Most modern day strategies have been based on the candlestick patterns because they're adaptable to any given situation. It is one of the most sophisticated yet simple patterns. One of the most common strategic factors is based on the high breaks and the low breaks. Hence, most of the new generation traders prefer the non-linear approach like candlesticks. What do candlesticks look like? 2 components make up for a conventional candle: the body and the shadow. With an opening price, closing price, high price for that time period and low price for the same time period, a candlestick displays a price bar. The candlestick's body displays the open and the closing prices, while on the top and the bottom shadows display the high and low prices for that time period. Since the shadows resemble wicks, these objects are known as candlesticks. The candlestick's body color indicates whether it's displaying a bullish or a bearish price movement. If the initial price is lower than the closing price, the candlestick's body will be white. However, different softwares use different colors, with the typical being green, blue, or red. The white body's bullishness increases with length, indicating that there was aggressive buying over that time period and that the bulls have ultimately prevailed, which is a very lengthy white body or bar. Types of candlesticks. Number 1. Bullish. Bullish candlestick patterns indicate the presence of market momentum that is mostly driven by buyers. Numerous bullish candlestick patterns exist, but not all of them enjoy the same level of popularity. Speculative buying were originally meant by the name bull, as opposed to a general sense of optimism about prices and trend lines. The phase was originally described when somebody bought stock in the hope that it would increase in value. The phase eventually changed over time to refer to the person making that investment. It subsequently spread over to the idea that prices would increase in general. But the closing price is always higher than the opening price in a bullish market. 2. Bearish. Investors that anticipate a decline in prices are known as bears or bearish investors. A bear market is a pattern where investors are negative about the direction of the financial markets in the future. When participants with selling sentiments dominate the market, bearish candlesticks are present. A variety of bearish candlestick patterns are used by technical traders. The open price is always higher than the closing price in a bearish market. 3. Neutral. A neutral candlestick is a pattern where the opening price and the closing price remain the same. It is formed when a market is indecisive about price, and even if there is movement, it always comes back to the starting price. Now that we've discussed the types of candlestick patterns, let's talk about some candlesticks names. 1. Hammer. 2. Piercing pattern. 3. Bullish engulfing. 4. Morning star. 5. The white soldiers. 6. Doji. Thank you so much for watching this video. I hope you enjoyed it.